Most people chase side hustles. Real traders learn to multiply money with a phone and a plan. By the end of this video, you'll know exactly how to start trading Forex as a beginner. This video is simple, step by step, and built to protect your money while you grow it. You're not investing in a company, you're not buying property or betting on earnings reports. You're trading something simpler than all that. One currency against another. Forex stands for foreign exchange. It's a global market where banks, hedge funds, and everyday people trade currencies for 24 hours a day, 5 days a week. This market moves over $7 trillion every single day. That's more than the stock market, the crypto market, and real estate combined. You might not see it, but it touches everything. Every flight you take, every international purchase, every time a country changes interest rates, the Forex market reacts. And for us, that movement is an opportunity. Because when currencies move, we can make money. And you can do it from a laptop, from your phone, from anywhere with Wi-Fi. There's no opening bells, no closing hours, just charts and an opportunity. You don't need a suit, you don't need a background in finance. You just need to understand one thing. When one currency goes up, another goes down. It's a tug of war. And if you learn to spot the winner early, that's where the money is. So here's how it works. Let's say you're looking at Euro USD. That's the euro versus the dollar. If the number goes up from 108 to 109, the euro just got stronger. Or if it drops to 1.7, the dollar just won that round. You can bet on an either outcome. If you think the euro is gaining strength, then you go long. If you think it's losing strength, you go short. Long means buy, short means sell. Those are the only two directions that actually exist in this market. And if you hear someone say, I'm bullish, they expect the price to go up. Bearish, that means they expect the price to drop. That's it, no complicated jargon, just pairs, direction, and timing. And guess what? Every time a country changes its policy, the Forex market reacts. Every time a central bank speaks, the charts, they light up. It's a real-time economics. And you don't need to know everything, you just need to know when to act. So now you know what Forex is, why it matters, and how it works. Question is, what do you actually do with that knowledge? So stick with me, because in the next section, I'm gonna show you how to set up your first real trade. Now, let's talk about the part everyone cares about, the money. How do you actually make it? When you open a trade, the market moves. But we don't measure that move in dollars, we measure it in something called a pip. That's short for percentage in point. It's usually the fourth decimal place on the price. Like if it's Euro US dollar, goes from 1.1000 to 1.1001, that's 1 pip. 1 pip might not seem like much, but with the right trade size, that tiny move can make you some serious money. This is where lot sizes come in. So a lot size is how big your trade is. And there are 3 types that you need to know. A standard lot is 1.00. That means you're trading $100,000 worth of currency. A mini lot is 0.10. That's $10,000. And a micro lot is 0.01. That's $1,000. Now, you're probably thinking, I don't have 100K lying around. Well, you don't need to. That's where leverage comes in. Leverage means your broker lets you control more money than you actually have. If you've got $200 in your account and your leverage is 1 to 50, that means you can trade like you have $10,000. It multiplies your buying power. And here's the truth that no one tells you. Leverage is a double-edged sword. It can boost your profits, but it can also blow your account really fast. So how do you stay safe? You control your own lot size. Even if you have access to more money, you don't have to use it all. Think of it like driving a fast car. Just because it can hit 200 miles an hour doesn't mean you go 200 miles an hour every time. Now, let's talk about your broker, the one who gives you access to the market. They're the middleman between you and the banks. You can't trade without one, so picking a good broker, it's not optional, it's critical. And here's how brokers make money. They don't charge you directly like a store. They charge you through a spread. That's the difference between the buying price and the selling price. If Euro USD is 1.1000 to buy and 1.1002 to sell, that's a 2 pip spread. Some brokers also charge a commission, a small flat fee on every trade. Personally, I prefer commission-based brokers. Why? Because you get tighter spreads. That means cleaner entries, more accurate stops, and better exits. If you're trading a strategy that needs precision, scalping for example, this matters a lot. A wider spread can ruin a good trade before it even starts. So the bottom line, choose a broker with tight spreads, solid reviews, and fast withdrawals. Don't just pick the one you see in an ad. Do your research, test them on a demo account, and then only deposit real money once you actually trust them. And I'll be putting a broker that I actually use in the description down below. Right now, we're just laying the foundation, because if you skip the basics, then you're gonna be gambling. But if you take the time to learn this part, right, then everything we cover next will start to make you money. Now, let's talk a strategy, because without one, you're not trading, you're just pressing buttons and hoping that something works out for you. There are 3 main types of traders. You've got the scalpers. They're in and out of trades within minutes, fast paced, lots of screen time, and they chase those quick moves. Then there are the day traders. They take a few trades a day, close them all before the market starts winding down. They're looking for momentum inside a single day. And finally, there are the swing traders. They hold trades for days, even weeks, could be months. They're not staring at the charts all day. They wait, they plan, and they catch the bigger moves. Me personally, I'm a swing trader because I like freedom. I don't want to babysit the market. I want high quality setups that let me live my life and still make my money. But here's the real truth. None of these styles are better. There's only one that works, and that's the one that fits your lifestyle. If you got a job or school, swing trading might work best. If you got all day to watch the charts, scalping might be for you. You got to pick a lane, you have to master it. Don't jump from style to style every week. That's how you're gonna stay stuck. Now let's talk about how to actually read the market. And no, it's not magic, it's just structure. So look at the chart and ask, is the market making higher highs and higher lows? And that's an uptrend, then you wanna be buying. Is the market making lower highs and lower lows? And that's a downtrend, and you wanna be selling. That's the core idea. Buy strength, sell weakness. That alone will filter out 80% of your dumb trades. Now let's go deeper. Let's talk about the charts. We use candlestick charts. Not line charts, not bar charts. Candlesticks tell you everything about the price movement. Each candle shows the price action during a specific time frame. Could be 1 minute, 1 hour, 4 hour, or even the daily. Just depends on your trading style. A green candle means your price went up. A red candle means your price dropped. And see, those little lines sticking out from the top and the bottom, those are called wicks. They show where price tried to go, but got pushed back. That's rejection, and it does matter. Those wicks can help you spot reversal zones. They can help you avoid chasing bad entries. They're small, but they're powerful. Now, indicators. They're tools that help you read the trends faster, but don't overdo it. Start simple. Use moving averages, specifically the 200 and 800. Those act like your compass. If price is above them, you're in an uptrend. If price is below, you're in a downtrend. You can use them to stay on the right side of the market. Don't try to outsmart the trend, just ride it, and that's how you're gonna win. Now that you understand how to read the market, what's next is learning how to enter with confidence, because the setups are out there, but only the prepared know how to take them. So here's the part that no one wants to hear. The reason most traders actually lose, it's not their strategy, it's their discipline. They take one win and suddenly they think they're invincible. They lose one trade and they start chasing everything that moves. No plan, no patience, just pure chaos. They risk too much, they double down on bad trades, they try to make it all back in one shot. And that mindset, it doesn't just kill your account, it's gonna kill your confidence. If you wanna make it in this game long term, the key isn't more indicators or better signals, it's your risk management. So here's the golden rule. Never risk more than 1% of your account on a single trade. That means if you've got $1,000, you can only risk $10. Use a stop loss on every single trade. That's gonna be your emergency brake. If your trade goes bad, you cut it and you move on. The best traders in the world lose all the time. But when they win bigger than they lose. That's the edge. It's not perfection, it's just being profitable. You don't need to win 80% of the time. You can win 40% of the time and still grow as long as your wins are worth more than your losses. It's not emotional, it's math. And once you understand that, the game starts to slow down a lot. So yeah, this isn't about guessing the market, it's about managing yourself inside of it. Because that's where 90% of the traders lose. It's in their head. Now the question is, what are you going to do with it? You've got the foundation, you know what Forex is, you understand how pairs move, what a pip means, how leverage works, you know how to find a trend, place a trade, and protect your capital. Now it's time to train. Go open a demo account, practice like it's real money. Log every single one of your trades. You need to build your own playbook. This isn't about luck, it's about reps. Do it enough and placing a trade will become second nature. And when you're ready to go live, please start small. Make $10, then go for 100, then 1,000. Stack your wins and don't rush the process. You're not here to gamble. You're here to learn a skill that can feed you for a lifetime. So let's get to work. If you found value in this video, please hit that subscribe button and I'll see you guys in the next one. Love ya. Peace.